Vehicle to grid charging. Welcome to today's webinar. Just want to quickly go through why bidirectional charging is going to revolutionise the Australian energy market. So vehicle to grid charging is obviously electric vehicles are becoming a big part of our market. Up here in Queensland at the moment, I think we have 40,000 electric vehicles on the roads. So they're now making 7 to 10% of actual vehicle sales in Australia at the moment. So the uptake of EVs is really accelerating. But you've got a big battery sitting in your vehicle, sitting at home. So vehicle to grid charging and discharging is going to change the game for the Australian energy market. So what I'll run through today: unlocking distributed energy storage, grid stability and renewable integration, lower energy costs for consumers, reduced need for network infrastructure investment, and empowering consumers as active market participants. So basically, unlocking distributed energy storage with this E2Grid prospect, Australia could unlock 16 gig or 30 to 40 gigawatt hours of potential storage by 2035 if the EV uptake follows current projections. So to put that in broader terms, that 16 gigawatt of capacity, over the last 10 years, I think we've installed 2 gigawatt of battery storage capacity. So to achieve something like this over the next 10 years would be extraordinary. EV batteries are typically idle for 90% of the time. So you think about how you use any vehicle. You drive to and from work and then a bit of weekend use. So 90% of the time you've got a usable battery sitting there either at work or at home. So V2Grid monetizes this unused capacity. It creates flexibility, it's scalable and has a fast response storage solution compared to other large grid batteries. So at this point, larger grid batteries are actually improving their fast response time. So that is one point that doesn't quite stack up here, but the flexible and scalability of this grid storage is a huge part of the equation here. It reduces reliance on centralised fossil fuel peaking plants by decentralising energy storage across neighbourhoods. So if you think about things like virtual power plants where they're taking all of the battery storage units in a neighbourhood and charging and discharging them as one central, one connected battery storage unit, the vehicles will work exactly the same. They're distributed, they're decentralised, they're located all across the NEM, and when connected in a virtual setting, it gives us the ability to add enormous capacity in a short period of time. Grid stability and renewable integration. So electric vehicles help smooth load fluctuations and manage voltage at the local level during periods of high rooftop solar exports. So for those of you that don't know, the uptake of rooftop solar has caused a pricing situation where the middle of the day, there's energy is almost worth nothing or it's into the negative pricing in the wholesale market. So much rooftop solar, quite a lot of it is exporting into the grid in the middle of the day, and it causes load fluctuations. So very little load during the middle of the day, and then high peak loads when there's no solar happening between that 5 to 7 p.m. in the evenings. These sort of storage units can help with that fluctuation of the duct curve. V2Grid can provide frequency control ancillary services. So FCAS is something that's been spoken about quite frequently as a huge market for large-scale battery storage, where you can actually make revenue streams from trading in this FCAS market. V2Grid opens up your battery in your vehicle for participating in that trade as well, so it can become a revenue stream for you. Reduces risk of solar and wind curtailment. So battery storage, whether it be utility scale or attached to a home or business, usually does the same thing for the occupant in that it will reduce your energy usage outside of solar production. Straight up energy arbitrage, you're filling it with solar, free energy into your battery, expelling that and discharging that of an evening or outside of the hours where your load is higher than what your solar is producing. So when solar and wind assets, renewable assets, utility scaled assets are curtailed by storms, fire, low wind events, a large battery unit like what Grid will allow will help reduce the risk of that curtailment, having a larger cause on wholesale electricity prices. EV fleets can act as fast response grid assets during emergencies. So basically, it's the same thing. If you've got a large company with a fleet of electric trucks or electric vehicles all parked up of an evening, that's a fairly large battery energy storage system right there that can act as one of CNI or utility scale may, depending on the number of vehicles in the same space. So provide black start capabilities after an outage. It may even be that these electric vehicles can provide you backup power when the power goes down. Lower energy costs for consumers. So EV owners can participate in time of use arbitrage, charging cheaply overnight and discharging at peak prices. So that's a very simple allowing EV owners to participate in those FCAS markets or arbitrage markets or other markets that's going to add some revenue to your vehicle rather than just costing you money. So vehicle to home and vehicle to business models, reducing grid consumption during peak periods, obviously depends on business hours, but the ability to plug these vehicles in at home or at work and charging to go both ways really opens up opportunities for further savings on your electricity bills or revenue opportunities. Further to that, a reduce exposure to wholesale price spikes. So those in the mass market who don't have the ability to negotiate energy contracts, you're basically looking for the lowest possible rates you can find in the market based on a mass market retail offer. With the advancements in Grid battery energy storage systems, batteries on the whole are going to smooth out the risks associated with heat waves, peak demand events, grid outages that cause huge fluctuations in wholesale energy prices. So by and large, the ability for that grid to stabilise, the ability of the vehicle to stabilise the grid during these events is actually going to affect your power prices in the long term as well, for the better. Encourages the development of new retail products, dynamic tariffs, Grid participation plans with shared revenue models. So this will certainly be something new coming from your larger retailers in a very short period of time. And reduced need for network infrastructure investment. This is a fairly quick one, lowers the need for gold plating the grid. So we've got a huge job to continue to maintain, but also improve the grid that we already have, the poles and wires. Distributing this energy in localized energy areas will help reduce the need for bottlenecks in the grid currently, and help reduce the need for spending that has to happen. So it supports the deferral or avoidance of major transmission upgrades. Some areas, depending on the uptake of EVs, may not even need the upgrades that they're predicting at the moment, and help balance suburban low voltage networks impacted by higher rooftop solar penetration. So I think there's even going to be a market for people that don't have solar, renters, for instance, to plug into the grid. Say they're working from home during the middle of the day, they can charge their EV out of the grid and either get paid to do so or not have to pay for that energy. So there's going to be a whole heap of new opportunities arise out of this. And empowering consumers as active participants in the market. So these are things like the virtual power plants that I've talked about, peer-to-peer energy trading platforms, opening up your battery that you've paid for, that you own, to provide you ongoing revenue streams across a wide variety of applications. So they become prosumers essentially. It gives them control over their energy costs and allow you to use that battery to participate in a virtual power plant made up of an aggregated EV fleet. and encourages corporate and fleet electrification strategies with new revenue streams from the market. So when you've got a fleet of EVs that gives you a certain capacity, your fleet can at certain times become a market participant and trade into SEFCAS without the need of third parties. So or aggregating with other VPPs or other EVs in an aggregated VP situation. So look, this is a very exciting advancement in our standards that vehicle to grid charging is now becoming approved. Watch this space. We're very much at the very beginning of what could be a huge opportunity for the Australian energy market.